And always good to have you. Hope springs eternal when it comes to China, I know, and you've been navigating very difficult markets for some time. Are you hopeful for 2025?
2024 wasn't too bad for us. Our graded China growth ETF CGRO was up 20%, which is a decent return, all things considered. And I think the conditions are laid for an even better trend in 2025. The Chinese government has been kind of trialing and erroring different forms of stimulus, and it looks like the trade-in policies are working. General debt relief for the provincial governments is finally coming into full effect, and finally they're unlocking a lot of the money that they owe downstream to local businesses. The real estate market seems to have stabilized. This month saw double the real estate transactions in Shanghai that were there a year ago. And I think that Donald Trump has the potential to bring in a kind of brand of ruthless pragmatism into the dynamic that could see it actually find some constructive and concrete evolutions as opposed to just an ideological back and forth.
Yeah, I want to talk more about that. But when it comes to China, I mean, you talk about debt relief, but we're also still talking about worries of deflation, a Chinese consumer that, despite attempts to prod them, seems unwilling to really increase their spending in a significant way. You know, on the local property level, is it going to be enough to change those two dynamics?
Well, we don't have to shift them into, buyers again at the local property level. We just need to stabilize the current prices. And in some ways, stopping for future construction will actually help that, because there's been a huge overcapacity issue across every sector in China, but none more acute than I think in real estate. And so if that construction slows down, supply starts to stabilize, and again, we're seeing it in the tier one cities, that stabilization. But when that free fall stops in housing prices, people stop feeling poor. And when that feeling wears off, that's when they start to get their sea legs back under them and come back to the high street. So that is the critical litmus test. It's not even further real estate consumption. It's simply stopping the bleeding. And I think that we're seeing signs of that now.
Ben, going back to geopolitics and the relationship between the U.S. and China, last week we saw President Trump file a motion with the Supreme Court asking them to pause a ban on TikTok, which was set to take effect next month. That was a different stance than we saw from President Trump a few years ago. And I'm just curious what you think that implies about Trump 2.0 and its relationship with China.
Trump's stance on TikTok was not surprising to us, and I've even, spoken with other senior officials that are highly influential within the Republican Party and within the kind of MAGA base, and many of them are proponents of TikTok and the ability it has given them to address a much wider audience. Let alone the kind of interrelation between some of President Trump's largest donors and their investments in the application. So this outcome was not surprising. It's something we've advised to people for the last year or so. But alongside of that, you obviously saw President Trump emerge from that meeting with the CEO of TikTok and say that together China and the United States can solve all major issues. You saw him retruthing articles about incoming or nominated Ambassador Perdue, that he will bring a pragmatic touch to the relationship because of his experience in doing business in China. And so I think these all lead to a highly pragmatic environment.
Ben, you mentioned the performance, I think, of your actively managed ETF. I don't know what the asset number is. I think it's fairly small. But I am curious, are you going to continue to own the same names? Any change in terms of how you're going to structure your own portfolio based on your expectations for what China will and won't do in 2025?
We came into the year and we came into this strategy thinking you needed an active approach to China just because of the constant back and forth on the trade front, new names being added to the entities list or other export restrictions lists from the U.S. side, sanctions lists, and of course, watching the immediate impacts of these stimulus measures, be it trade-ins or otherwise, and their effect on consumers in China. And so we've been trading in and out not only of names, but also of markets, so A shares, H shares, and ADRs. And I think that approach has paid off. We're beating our nearest competitor, the likes of KWeb, by 5-6% on the year. And I think that you've got to be active on China. You cannot sit passively because there are too many things going on at once, too many variables.
And it should, I mean, we obviously talk a lot about the failure, so to speak, of the Chinese economy to put up the growth numbers perhaps that had been anticipated. But Ben, they are still a leader in solar, leader in EVs. battery technology, a number of other areas. Are there ways that you see that you can play those separate from the fact that the Chinese economy still continues to have its challenges?
Absolutely. Again, we look at a very selective swath of names within China that we see as high growth, either because they're exporting globally, the likes of Pinduoduo or Alibaba, who have large global presence, particularly in the United States. We're looking at names in the kind of fully integrated supply chain, the likes of BYD, who are doing tremendously well in building electric vehicles, both domestically and abroad. In China, I just saw a statistic today that in the next couple of years will be bigger as an electric vehicle market than the entire American car market. So a small China is still bigger than most of the world. And then, of course, any of these integrated hardware producers in the mobile phone space, our biggest holding today is Xiaomi, a company that's doing tremendously well, not only on mobile handsets and IoT devices for the home, but now electric vehicles, producing hundreds of thousands of cars. So you've got to move in and out of those names, but all of those are doing tremendously well in spite of the overall macro malaise.
Although they have dozens of EV makers, don't they? I mean, there's got to be some consolidation, doesn't there?
It's possible. I mean, already there was a lot. When we first invested in NIO 8 years ago as one of the first and largest investors, I think there were 300 electric vehicle companies that were registered at the time. That consolidated to just four or so. So I think that list maybe could add one or two names, but no. And a lot of global names are actually consolidating into them. So European automakers like VW are actually co-producing electric vehicles with the Chinese. So I think you'll see more of that kind of co-branding across combustion and EV names globally.
Yeah, well, such an important market for so many of the German automakers, and obviously it's gone away in terms of market share to a certain extent. Ben, thank you.